Hello traders, what's going on? So this is a ad hoc market update session. The market has been very volatile lately, a lot of movement up and down. Isn't this what I have promised you? There will be a lot of volatility and you cannot chase single candle. If you chase this, if you think this is the bottom, pin bar, high volume, you are in for a very, very bad time, okay? So since we have some high volatility movement and we have Microsoft and Google earnings that came out, right? I wanted to do this update session to kind of let you guys have a proper direction and make sure you are not doing anything silly like bottom picking, okay? Actually, I will prefer a live session like how we normally used to do, but I'm quite busy with my course. I have a course tonight. I would really love to go through the Google and Microsoft earning tonight, but unfortunately, I'm unable to. So we will do a live session on Thursday and Friday itself, because on Thursday's session, we will have Facebook result ready. And on Friday, we will have Apple and Amazon results. So very exciting, more volatility ahead. Okay, so with that said, let's get into our market update. S&P 500, we have another triple digit drop within the same week. When have you seen that before? When have you seen this triple digit drop? Okay, so one thing I want to mention is that the background macroeconomic factors are very bad. Regardless of what support line you want to draw at what level, right? Those line doesn't make sense. A lot of people will say things like, oh, I'm so unlucky, Jerome Powell come out and say 50 BPS. But if the macroeconomic is very bad, right? He's gonna come out and say it sooner or later. And if you keep going into the long, if you are fighting the Federal Reserve, right? At some point, you are going to get caught. At some point, they need to do something and you are going to get caught. So you are essentially trying to pick pennies in front of a train track, and hopefully the train doesn't come and hit you. And that little bits and pieces of profit that you get from your long position, is it worth it or not? It's not worth it. Okay, so pay attention to the overall macro factor. And until those situations improve, right? For example, the rate hike, the reduction of the balance sheet. If the balance sheet haven't reduced yet, but they are gonna reduce it in May. And on top of that, we have inflation still going very, very high. And we have all the supply chain issue, and we have all the bond market is crashing left and right. We have mortgage rates going up. So all these things are interconnected. And if you try to buy the market hoping that some miracle will happen, right? You might want to double check what like your strategy lah. Okay, but I will also like to point out that in a bear market, the rallies are very, very strong, because these are rallies that is fueled by short covering. Also, these are rally that people try to bottom pick, and then on top of that, there is short covering, right? The rally can be extremely strong. You will see triple digit gain in one day, and these are very common in a bear market sell down. Okay, so do not get confused this rally into a real rally. I will mention this again, as I have mentioned as early as February. There will be no V-shaped recovery. The V-shaped recovery is gone. The V-shaped recovery was only possible because of the Federal Reserve pumping all the free money. And now all those free money that they have pumped have come back and bite us in our ass. Okay, it has come back and bite us back already. If there wasn't so much free money lying around to pump up this entire market, right, S&P would not have gone so high. It would not have fallen so bad. Inflation wouldn't be so high. We won't have all these problems that we are having right now. So it is the same as like you have to pay your country a lot of tax, and then they give you like $100 GST voucher and you are happy like that. Eventually they will come and take it back lah. Okay, so hopefully I'm giving you the bigger direction. Okay, the bigger direction. Within the bigger direction, yes, you may have small bounces here and there going up. You want to play long position on them, that's your choice. But the thing is, you will get caught eventually. At some point you will get caught. It's okay if you have extremely good trading discipline, you are very good with your risk management, you know how to get out exactly once you know you're around, right? But those who are trading based on ego, right, like really want to bottom pick, want to prove the world, you might get into a very big trouble. So just putting that out there. But at this stage of the market, at this point of the market, you can actually see that S&P have recovered. S&P futures, it has recovered about close to 50 points. That is like more than 1%. And in fact, Nasdaq future actually recovered almost 2%. So we are facing a oversold situation. Market have dived down too fast, and we are seeing some kind of relief rally. Okay. So once again, the same as this little candle here, this is a relief rally. Okay. This is not a rally for you to go and bottom pay and buy and hoping that everything will be all rainbow and butterflies again. Be very, very careful. And this rally is probably, I would not say it is caused by the earning itself, because let's go through the earnings. Okay, Google actually had a very bad earning. They kind of missed their missed both their revenue estimate and their earning estimate. I think their avenues, the advertisement side is kind of like hit quite bad. And when the result came out, right, Google actually fell as much as 6% after market hour. You can see this blue color shaded area is the aftermarket. Okay, so the closing price was here, but after market, when the result came out, it fell as much as 7%. But eventually towards the end of the aftermarket hour, it managed to recover quite substantially. But it is still down by minus 2.7%. That is still very substantial gap down that you will be facing today. However, on the bright side, we have something nice to look forward to. If I mean, for the overall market, Microsoft had very, very strong earning, extremely strong earning. Every area of the business is growing. And when the result initially came out, I think it was like kind of get spooked out by by Google's earning. It died first. It actually died first before the numbers even come out. It actually just jumped down first because Google numbers earnings came out first. But after all the earnings number came out and the webcast came out, when the market kind of like a little bit come down already, Microsoft went up 4%, 4.8% after excuse me, went up 4.7% after market. So that's a good thing. That's some optimism that we can see for today if you are hoping for a green color candle. Okay, but nonetheless, Google is still a major factor, major portion of the, excuse me, I'm trying to sneeze. Google is still a major factor of the S&P 500, and it does have quite a bad earnings. And on top of that, right, they actually announced 70 billion share buyback. They actually announced 70 billion share buyback. Where is it? Where is it there? They have authorized 70 billion share buyback. Okay, so now I want you to think about it. Why is the market not responding to a share buyback? Imagine you're a company and you are in this current state of the market. You have all this cash lying around. You miss your earnings revenue. You miss your you miss your earning estimates. You miss your revenue estimates, and you have all these cash lying around. And what do you do with that cash? Maybe you might want to like improve your business, but instead of improving your business to get more revenue and earning in the futures, right, what you do is you want to do a share buyback. You want to artificially prop up your share price. This is something that works in the past, but it seems like the market is getting a little bit smarter. All these share buybacks are not really gonna gonna provide optimism really, because like most of the time company do share buyback because they believe in their company, they believe their own business, they want to buy the share, they want to provide value for the shareholder. But now it seems like the revenue is not doing well, the earnings is not doing well, and you want to do a share buyback. That is a little bit suspicious, a little bit question mark there. Okay, so who know how Google will play out today when the market open, but it will definitely open gap down. Whether or not it will close up the gap, went back up or whatever, we don't really know lah. But from the futures, from the S&P futures itself, right, we might see some kind of a relief rally coming in. Okay, so these are both Google's and Microsoft earning, but we also have Facebook, which have collateral damage. That was a collateral damage because Google revenue is somewhat like Facebook revenue. They do earn a lot from advertisement. Okay, they do earn a lot from advertisement, and because of that, right, when Google's advertisement revenue suffer, right, most likely those Facebook shareholder also a little bit scared lah. So they try to sell down also, and you can see how Facebook post market, right, after market, it went down by as high as 4.75%, and it recovered slightly, and it is still down by 2.38% after market close. Okay, so we still have pressure lah. Although the S&P futures is red, right, we do have some pressure coming in. Things might open gap down, but price may recover. Then after recover already towards the end of the US market, it might just shoot down again. Who knows? It's very volatile. Okay, extremely volatile. If you don't know what you are doing, if you have no idea what the federal rate high is, if you have no idea what the earnings are, if you have no idea what the challenges these companies are facing during their earnings, right, and you are just simply drawing some line on your chart, I suggest you stay out of the market. Okay, it's very dangerous position right now. And we also have things like Rivian, and everything is dropping. The only thing that is green was all the commodity stuff lah, which I was slightly relieved to see green, but I was extremely disappointed by Archer Daniel Midland. It has a very good opening, gap up by 5% like that, but it just closed all the way down. So this is slightly worrying. I may take my profit on this counter lah. I'll see how it goes. Okay, and same thing for also CCJ. Actually, we're not able to recover, even though we have Shanari Energy recovering, we have Peabody Energy coal also recovering. So I'm gonna monitor closely on these two counter lah. Okay, then on the other end, we actually have Visa reporting very good result. You can see how they went up, the price went up after market by 5%. So it actually undo the damage for yesterday itself lah. Yesterday it went down by 4.27%, but after market it went up by 5.1%. So because of Visa going up, right, definitely you will see MasterCard having a similar price action after market also, because they are in a similar business. And after market, right, I mean, if Visa posts good result, most likely MasterCard will also post good result. So MasterCard actually went up by 2.55% after market also. So when MasterCard result came out sometime later in this week, right, and they have very good earnings, right, and the price start to fall, is because the price already have gone up here. Okay, so you have to think a little bit. Don't blindly look at things and then like don't even know what's going on. Okay, so if you are looking to short right now, you are like, alamak, should have follow Zor, like, wow, if I short here, so much profit, but too late. So at this point, right, don't chase the short already. There will be a relief rally coming in, and that relief rally, once again, is not for you to go and play long position. Okay, there's a key level at 4300, and perhaps it can also retest 4400 and 4500. See, these are all the so-called key levels lah. Okay, So until this level are broken, right, you probably will not want to do any long position. In fact, I will still think this area is this 4400 to 4500. This area is very, very crucial area. In fact, market can rally upwards and come back down like that, which is very, very possible, very possible. But the thing is, if you decide to buy this rally, right, it doesn't mean that it will go all the way until here also. So don't think that market rally, it can confirm chop hit this level. What it can do is that it can actually go up here a bit and then come back down already, okay? It is just to say that if, let's say, price hit this level, right, it might be very hard to break. And if it does break, then we have a good indication that bulls are back in power lah. Okay, so what I want to see before I become a bull is this 4500 have to be broken. But not only that, not only the technicals, at the background, right, I want to see a lot of the macroeconomic factors improving, inflation that come back down, Federal Reserve not so hawkish already. Maybe they are saying things like, okay, inflation have come down, we don't want to be so aggressive, we want all those things in the background, we want we want some money supply in the background coming in to help push the market itself. Okay, so unless all those things are aligned, right, I'm not really looking for any kind of long position here, and neither should you. So if you miss the entire short opportunity, right, don't worry, there is a lot of things to short. There is so much things to short that my watch list is full. I don't have enough cash. I don't have enough cash to place all my short position. It's and I literally have to control myself not to go overboard, because if you short on Tiger, right, it allows you to use margin, and I'm very afraid that I might max out my margin and my my portfolio might be over leveraged lah. So be very careful. Okay, so there are still quite a lot of sector that you can go for short. Excuse me. And that sector I have been mentioning over and over and over, that is the home builder sector. Home builder sector is like at the early stage of the drop, and when it drop, right, it's gonna like jump off the cliff, that kind of drop. So a lot of people are looking at things that are obviously already dropped so much already. So most likely they might not be able to drop a lot lah. So what for? Look at those. What you want is you want to catch something that have a lot of meat. Okay, so let's look at a few home builders company. We personally have Pool Corporation. Pool Corporation, we can see from this candle itself that this is a guaranteed chop. The earnings come out. Earnings is very, very positive. But even though earnings is positive, what happened? The smart money is using the positive earning to get out of the stock. Then all those retailers don't know what's going on, don't even know about the macro, just anyhow blindly buy. What are they? They are the liquidity that smart money needed to get out of the market. So don't become the smart money liquidity, okay? Okay, very important. So this is a very nice shot. You have a top that is forming, and you have a counter, you have a candle that is giving you a confirmation that things are sooner or later gonna sell down, and you have this support level that's waiting to break. So this is like one of the easiest trade setup that you can find. The only thing is that you need to have confidence, you need to have a little patience and hold on to it, and you will see this whole thing crashing all the way down to 320, 280. It is sooner or later, okay? And just because the price move up like a little bit, don't be like, oh no, oh my god, so how, like help me. Don't be that kind of person, okay? If you want big money, make sure you are properly managed in terms of your risk position and your lot sizing, that you can handle some kind of movement. Amazon, look at Amazon shorts. We short all the way from here. I held through this entire portion sleeping. I'm not even awake and watching the market. I mean, I'm watching the market, but I'm not even caring about my position on Amazon, because this is expected. Price is not gonna move one red candle after another red candle after another red candle. No, it will have some recovery. Let it happen. Stick to your trade plan. Okay, it's as simple as that. And what if it really recover and go back up? Then you take the loss. That's how trading is. There is no such thing as confirm go down, confirm profit trade. It is high probability, but if things start to go against you, right, then you take the loss. The key thing is You don't want to get out too early. You don't want to get out while you are still right. You don't want to get out while you are still right, but the market just give you a small little up move. You are like shocked already. Okay, so that's the skill that trader don't know how to learn. But if you follow the plan, if you follow your lot sizing, just stick to your trade plan. Okay, builder first source down by 6%. And sorry, just now we were talking about pool corporation. Another one is builder first source. Look at the chart, it's very nice. All the lower high coming in ready, and this one is just waiting to break down, and then you have a very nice trade. And PHN, Poultry Group, is almost the same as builder first source also. And it is going to break this very key level support already. Okay, so all these are very, very easy sector that is like, if you look at the macro a bit, they are going to fall sooner or later, and it's very easy to target them. So aim for those. Okay, aim for those. Don't after everything fall ready, then I post my profit, then everyone come and like, is all still can short or not? I will I will ignore those comments. I will definitely ignore those comments. Okay, so Netflix also, I have quite a lot of people asking me Netflix can buy here or not. I sincerely hope you didn't buy lah. Okay, so I won't be too sarcastic on those who want to be hero. There's no medal for being a hero lah. Okay, don't trade with your ego. Don't trade with your ego. So the other sector after home builder, right? The other sector that is looking, I'm looking for quite a big breakdown is the trucking sector. I think trucking sector, right? Currently we are somewhere at the very high inflation. Sooner or later, once the Federal Reserve raise the rate by 50 BPS, and then when inflation start to come down and when demand start to ease, right, these trucking sectors are going to fall because there's no more demand already. Okay, so this trucking sector, we have some trade set up in the trucking sector, but I mean, if you want to get into our trade in a timely manner, if you want to look at our trade ideas more closely, right, of course you can join our Patreon. This is just like a teaser for you. You can go and do your own homework by yourself. Okay, so trucking sector, we have JB Hunt already dropping very, very big, and we have good earnings, but the earnings is not really doing anything for the stock itself lah, and it seems like it's creating a bearish flag. So most likely it's gonna go sideways, and once the demand, once the global the consumer demand is gone, right, it's gonna jump down like that. Okay, so this is just waiting to happen. So same thing, Night Swift transportation, you can also see that strong earning, price open gap up, but what happened? Same as Pool Corporation, the market, the smart money is using the good earnings to sell down. They are using the good earnings to sell down, sell to all the retailers, don't know what's going on. Okay, so this is also a bear flag that is waiting to go down. And another one, Landstar. So a lot of people got scared by Landstar also because it suddenly went gap up, but the stop loss that I've given is still very safe for this trade. There is no reason to be scared, and right now it is like facing a resistance there, and then the moment it start to come down, right, you also have a very good trade setup. And in fact, if you are not in this trade, right, maybe you might want to consider entering this trade also. TF2 International, you can see all this. These are all bearish flag, all the bearish flag forming. Okay, very nice trade setup. What is this? XPO Logistic. I have not seen this one before, but I believe I didn't choose this because it's like fall. it has fallen so far already without any recovery. And SAIA, very similar trade setup. Okay, so these are all waiting to fall one. These are at the infant stage. I like to call them, they are building up for the great fall, the big fall. They are slowly building up for that moment. Right now, they are still surviving. There's still some demand, the inflation high, consumers still have some spending power. So whatever the how high the trucking cost is, right, consumer can still pay, but sooner or later, once the Federal Reserve rate goes up by 50 basis points, the demand will be gone, and all these counter will start to drop left and right. And in fact, if you notice recent news, right, like the trucking sector, there were a lot of the truckers asking for increase in wages. And I think recently Walmart, they are paying like 100K per year to their truck drivers. Like all this costs are, all this increase in wage costs are, they are also eating into the profit margin of all these counters. And on top of that, you combine with the eventual demand, consumer demand going down, right? They are not going to survive. Okay, so summarize a bit. Market is still going to be very volatile. Don't see the future green like that. Don't know what's going on. Go and chase, okay? And any rebound is still a sell. Any rebound is still a sell. If you miss this entire shot, you may want to wait for the rebound to come in. Just patiently wait there. And then once you are able to see a good short setup, you can take the shot. Or you can focus on the home builder sector and the trucking sector. They will take a while. They will take a while to go down. Just place your trade there. Let them be. Don't need to go and rush them. I have some short setup like the children place and the Starbucks, which I held from as early as end January, February. They are in big profit right now. Okay. Like everyone worry about the finance how the finance fee how hold every day, like give money leh. If you are scalping a bit of movement here and there, your finance charges will be a very big part of your cost. But the thing is, currently my children place and my Starbucks, they are close to $4,000 in profit, and overall I have paid like $100 in the finance charges only, like 100 over plus only. It is very minute. It's very minute. Don't worry so much about it. Okay, don't worry over things that you're not supposed to be worried about. So because of that $100 of finance charges, you go and instead of placing short, you go and long, you're going to lose a few $1,000s in your long position. Okay, so with that said, right, I'm gonna end off this session. Remember, very volatile. Okay, Facebook, Facebook, Apple, and Amazon still waiting to come out. So don't get caught. Do not get caught. Stay safe. Okay, stay safe. Have a good day, everyone. Bye bye.